The S&P 500 is trading at $7,515, up 0.43% on the day, but what's really catching our attention is the move in Bitcoin, which is up 1.33% to $63,060, and gold, which is up 1.18% to $4,130. This combination of risk-on and safe-haven assets moving in tandem is a clear sign of a neutral regime, where the next catalyst will be key in determining the direction of the market. The VIX, often referred to as the fear index, is down 1.3% to 16.7, indicating a decrease in market volatility. But this could be short-lived given the geopolitical tensions brewing, particularly with the U.S.-Iran situation. Zooming out to look at the broader macro environment, we're seeing a mixed bag of signals. The S&P 500 is range-bound, indicating a lack of clear direction, while the yield curve is relatively flat, with the 10-year Treasury yield at 4.561% and the 2-year yield at 3.693%. This is a sign that the market is pricing in a neutral monetary policy stance from the Fed, at least for the time being. The dollar index, which measures the strength of the U.S. dollar against a basket of other currencies, is down 0.07% to 100.924, indicating a slight weakening of the dollar. In the context of today's market, the key thing to understand is that we're in a neutral regime where the correlation between assets is breaking down. This means that individual analysis of each asset class is more important than making broad macro calls. With the S&P 500 trading near its recent highs and the VIX indicating a decrease in volatility, it's essential for investors to stay vigilant and focused on the next catalyst that could move the market. Now, let's take a closer look at the top gainer of the day, LASR, which is up 14.91% to $67.46. This move is particularly interesting given the broader context of the semiconductor sector, which is up 5.66% today, led by the SOXX index. LASR's move is being driven by a combination of factors, including its recent earnings beat and the overall strength in the semiconductor sector. From a technical perspective, LASR's RSI is at 63.21, indicating that it's still in a relatively neutral zone, but its one-month trend is clearly upwards. The key thing to watch for LASR is its upcoming earnings report, which could provide further catalysts for the stock. In comparison to its peers, LASR is outperforming most of its peer group today, with BBAO and AHR also making significant gains. However, it's essential to look at each stock individually, as the drivers of their moves may be different. For example, BBIO is up 15.7% to $90.63, driven by its own earnings beat and the overall strength in the biotech sector. Meanwhile, AHR is up 13.99% to $77.39, driven by its recent contract wins and the overall growth in the tech sector. The key takeaway here is that while these stocks are all moving upwards, their drivers are different, and investors need to understand the specific catalyst for each stock. The second stock we want to look at is IONS, which is down 18.69% to $68.67. IONS move is being driven by a combination of factors, including its recent earnings miss and the overall weakness in the biotech sector. From a technical perspective, IONS RSI is at 31.42, indicating that it's an oversold territory, but its one-month trend is clearly downwards. The key thing to watch for IONS is its upcoming earnings report, which could provide further catalyst for the stock. In comparison to its peers, IONS is underperforming most of its peer group today, with PSKY and AZN also making significant losses. For example, PSKY is down 8.36% to $8.94, driven by its own earnings miss and the overall weakness in the media sector. Meanwhile, AZN is down 7.64% to $174.81, driven by its recent earnings report and the overall growth in the pharma sector. Before we dive deeper into the market, it's essential to understand the cross-asset signals that are emerging. Bitcoin's move upwards is a clear sign of risk-on sentiment, while gold's move upwards is a sign of safe haven demand. The combination of these two assets moving in tandem is a clear sign of a neutral regime, where investors are seeking both risk and safety. The 10-year Treasury yield is at 4.561%, indicating a relatively neutral monetary policy stance from the Fed, while the yield curve is relatively flat, indicating a lack of clear direction in the market. The key thing to watch here is the VIX, which is down 1.3% to 16.7, indicating a decrease in market volatility, but this could be short-lived given the geopolitical tensions brewing. Now let's zoom out to the bigger cross-asset picture, where we can see how different markets are interacting with each other. The price of Bitcoin is $63,060, up 1.33% today, which could indicate a slight increase in risk appetite. However, the price of gold is also up at $4,130, a 1.18% gain, which suggests that investors are still seeking safe haven assets. This mixed signal is interesting, as it shows that investors are not entirely convinced about the direction of the market. The oil price at $72.83 is down 0.94% today, which could be a sign of decreasing demand or increasing supply. The 10-year Treasury yield at 4.561% is relatively stable, indicating that the bond market is not yet pricing in a significant change in monetary policy. The dollar index at 100.924 is down 0.07% today, which could be a sign of decreasing demand for the U.S. currency. The relationship between these assets is crucial, as it can give us clues about the overall direction of the market. For example, when the price of gold and the price of Bitcoin move together, it can indicate a flight to safety, while a divergence between the two can indicate an increase in risk appetite. Today, we see that gold and Bitcoin are moving in the same direction, which could suggest that investors are seeking safety. The Fear and Greed Index is not explicitly mentioned in today's data, but we can infer the sentiment from the price action of various assets. The fact that the VIX is down 1.3% today suggests that investors are becoming less fearful, but the increase in gold and Bitcoin prices suggests that they are still cautious. Now, let's look at the sector rotation and supply chain dynamics. The best performing sector today is semiconductors with a 5.66% gain, followed by technology with a 2.52% gain. This suggests that investors are rotating into growth sectors, possibly in anticipation of a pickup in economic growth. The worst performing sector is energy with a 0.94% loss, which could be a sign of decreasing demand for energy stocks. The supply chain for the semiconductor sector is complex, with companies like LASR and BBIO relying on upstream suppliers like Taiwan's Semiconductor Manufacturing Company, TSMC, and downstream customers like Apple and Microsoft. Any disruption to this supply chain could have significant implications for the sector. Looking ahead, the next few weeks will be crucial for the market. The bull scenario, with a 40% probability, suggests that the market will continue to rally, driven by strong earnings and a pickup in economic growth. The base scenario, with a 45% probability, suggests that the market will trade sideways, as investors weigh the pros and cons of the current environment. The bear scenario, with a 35% probability, suggests that the market will decline, driven by a slowdown in economic growth and a decrease in earnings. The key support and resistance levels for the S&P 500 are 7,139 and 7,891, respectively. A break above 7,891 could indicate a significant rally, while a break below 7,139 could indicate a significant decline. Before the action plan, here are the three assets getting the most attention in markets right now. LASR is up 14.91% today at $67.46, driven by strong earnings and a pickup in demand for semiconductor stocks. BBIO is up 15.7% today at $90.63, driven by strong earnings and a pickup in demand for biotech stocks. ONS is down 18.69% today at $68.67, driven by disappointing earnings and a decrease in demand for biotech stocks. For aggressive investors, the key is to identify stocks with strong momentum and a high potential for growth. For modern investors, the key is to diversify across different asset classes and sectors to minimize risk and maximize returns. For conservative investors, the key is to focus on capital preservation by investing in low-risk assets like bonds and dividend-paying stocks. To implement these strategies, investors can use tools like TradingView to analyze charts and identify trends, and Seeking Alpha to research stocks and stay up to date on market news. They can also consider using a robo-advisor like Betterment to diversify their portfolio and minimize risk. This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions.